Good evening, this is George Will reporting. Tonight we have major developing news. The California Attorney General has formally brought criminal fraud charges against Prince Harry and Meghan Markle. Additionally, the Archewell Foundation has received an order to halt all activities right away while a criminal probe continues. Based on materials secured solely by our reporting crew earlier today, the accusations cover wire fraud, improper handling of charitable contributions, submission of inaccurate tax paperwork, and money laundering. The potential punishments could lead to as much as 15 years in federal prison for each person involved. This isn't guesswork or hearsay. It's an official criminal indictment lodged on January 17, 2025 in Los Angeles Superior Court, case number BD 25-01847. What follows stems from a 3-year inquiry that progressed discreetly even as the Sussexes kept up their publicity efforts and public engagements. The implications are enormous. We're witnessing the potential collapse of the post-royal purpose that Harry and Meghan promoted, the dismantling of their image as dedicated humanitarian benefactors, and a genuine chance that both could face trial and imprisonment. When the California Attorney General pursues charges this serious, it signals substantial proof. Choosing criminal action over civil measures speaks volumes about the case's solidity, something much of the established press has downplayed or described mildly. Tonight we'll lay it all out openly, because the public has a right to see precisely what these records show and what outcomes now seem unavoidable. If you're seeking the unfiltered facts that others avoid covering, and you want insight into how this probe unfolded and its direction, subscribe to the channel immediately and turn on notifications. Events are unfolding quickly, and updates could emerge anytime. Before we get into the particulars of the accusations and supporting proof, let's tackle the doubt many viewers have right now. Is this real? Are these records genuine? The confirmation comes from several independent channels that eliminate uncertainty. To start, there's the actual court submission, a 47-page charging instrument bearing the official seal of the California Attorney General's office, signed by Deputy Attorney General Patricia Morrison, and tied to a case number verifiable via the Los Angeles Superior Court's accessible records. Next, 3 distinct insiders from the California Department of Justice, speaking anonymously but with direct involvement, affirmed the details to us. Then, Bloomberg News published the initial report at 2:14 p.m. Pacific today, adding elements from their law enforcement contacts. Also, the Attorney General's office issued a public release at 3:30 p.m. acknowledging charges against unnamed parties linked to a Los Angeles County charity, aligning perfectly with the Archewell situation. Finally, Archewell's site went dark around 4:00 p.m., displaying a message about pausing operations temporarily, an unspoken recognition of a major issue. Though we lack footage of the filing, and the Sussexes' lawyers haven't commented publicly yet, the combination of court filings, source validations, major media backup, and the Foundation's shutdown forms irrefutable support. This doesn't rest on one unnamed tip or vague clues. It's the formal justice system advancing criminal accusations backed by years of work and vast financial records. Let's outline the main figures in this legal situation. Prince Harry, Duke of Sussex, co-founded and serves as the chief public face of the Archewell Foundation, having stepped away from royal duties to focus on independent humanitarian efforts. Meghan Markle, Duchess of Sussex, co-founded it and has steered most of its direction and activities, per accounts from ex-employees. James Holt, executive director from the 2020 start, oversaw daily functions and authorized financial papers now under scrutiny for fraud. Catherine Saint-Laurent, former chief of staff who left in 2021, reportedly gave investigators details on financial issues she witnessed. Deputy Attorney General Patricia Morrison heads the prosecution, with a track record in major white-collar prosecutions and an over 87% success rate. The charging papers list 8 distinct areas of alleged wrongdoing, each backed by thorough records and statements from witnesses. We'll review them one by one, as the overall picture points not to occasional errors or lapses, but to organized fraud carried out knowingly with intentional steps to cross legal lines. The first involves diverting donated money for private use. Records from March 2021 to October 2040 show roughly $0.3 million in Archewell donations redirected to cover personal costs with zero charitable value. Examples include $41,000 on American Express business cards for upscale hotel bookings at places like the Four Seasons Beverly Hills, Ritz-Carlton Montecito, and Peninsula New York, logged as work trips but actually personal getaways. Another $287,000 went to high-end fashion from Deere, Valentino, and Carolina Herrera, delivered to the Sussex's Montecito home, yet listed as outfits for non-existent public events. The foundation covered $156,000 for private jet flights to Hawaii, Cabo San Lucas, and Aspen, proven personal by tracking, not charity-related. Most striking, $89,000 paid for garden and pool upkeep at the Montecito residence, entered as upkeep for non-existent foundation offices there. The second area covers misleading donors about fund usage. Solicitation materials, site content, and donor letters promise specific applications. One case, a Silicon Valley donor gave $500,000 for youth education in Los Angeles within weeks. $385,000 moved to Harry and Meghan controlled accounts with no charitable outlay. A $250,000 gift for Afghan refugee aid saw under $18,000 reach related efforts. The rest funneled to general funds covering personal items. When questioned, staff gave vague replies suggesting activity without proof, a tactic prosecutors call continued deception. The third involves overstating charitable outlays on tax forms to hide personal use. Form 990s 4021-2023 claimed program expenses of $8.4 million. $11.2 million and a $9.7 million forensic review found real program spending at $1.3 million, $2.1 million, and $1.8 million, leaving over $23 million unexplained or personal over 3 years. Methods included labeling private trips as program work, counting personal aids pay as charity costs, claiming rent for free space, and listing non-existent events as done. The fourth looks at family members without roles using foundation resources. Records show cards issued to Doria Ragland, Meghan's mother, for $127,000 in car, furniture, and travel buys. Thomas Markle Jr., Meghan's half-brother, despite no position and strained ties, accessed accounts for $43,000 in unexplained withdrawals. Worse, debit cards funded private eyes and PR firms for personal Sussex matters like quashing bad press or probing critics. No charitable link, possibly separate offenses. The fifth covers shell entities and tangled finances to hide money trails. 7 LCs and companies, set up 2020-2023 by foundation lawyers, had charity like Names AG, Commonwealth Giving LLC, Royal Purpose Foundation, Sussex Global Initiatives, but were privately owned by Harry and Meghan. Funds shifted to them as service or partnership payments, though they did almost nothing and mainly funneled cash for personal spending, dodging direct oversight. One got $1.8 million supposedly for education but produced just a short concept paper and one call. Funds then went to personal accounts. Classic laundering via middlemen. The sixth involves misleading state charity overseers in required reviews. California mandates registration and yearly financial reports. Archewell's 2020-2024 filings had major falsehoods, claiming Los Angeles offices and 12 full-time workers. Reality, Montecito home base, 3 part-timers, reporting $4.2 million in grants. See verifiable only 8090 Nosnoid. When asked for proof, they supplied doctored statements and fake invoices. Obstruction, showing awareness of wrongdoing. The seventh addresses failing to keep mandated records and controls for tax-exempt groups. IRS and state rules demand clear spending proof, independent board supervision, and separation of personal foundation matters. Archewell breached nearly all. Board filled with Sussex allies lacking real independence, minutes missing or fake post request, finances mostly vague card statements without details. This isn't carelessness. It's intentional to prevent evidence of fund misuse. The eighth covers laundering via overseas wires to mask origins and ends. With FBI help, probes traced $3.7 million from Archewell to UK, Swiss, and Cayman banks, Transfers stayed under 10,000 reporting triggers, then bounced between foreign accounts before returning to Sussex, controlled U.S. ones. No real purpose, classic laundering for personal gain. Federal authorities are involved and could add national charges. Looking across these categories, a clear pattern appears, not sporadic missteps or weak oversight, but planned, clever fraud over years by informed individuals who hid their actions. Shell setups, layered wires, fake papers, false taxes, these show people aware of illegality. Betting fame would shield them from scrutiny. Now, tracing the probe's timeline shows how wrongdoing grew as they felt secure. October 2020, Archewell launches amid praise for their charitable social justice focus. December 2020, their early dubious charges on cards for luxury holiday buys. Small. March 2021, pattern speeds up with first big personal spend, 127,000 jet for Hawaii. Site visit. June 2021, Catherine Saint Laurent quits, later cites discomfort with improper finances. September 2021, first shell company formed, starting advanced hiding. First 9090 filed, later shown you 400% inflated expenses. April 22, major donor seeks spending details, gets evasive replies. July 2022, State Charity Registry notes odd patterns, asks for more. October 2020 response includes altered docs crossing into obstruction. February 2023, contractor whistleblower contacts AG with misconduct claims. May 2023, formal criminal probe opens, subpoenas issued. August 2023, feds join over possible federal laundering violations. November 2023, 23 interviews with staff contractors yield damaging accounts. February 2024, forensic review confirms 23 million gap. June 2024, evidence to grand jury over 3 days. September 2024, indictments on 8 fraud counts. December 2024, plea talks fail over no prison demand. January 17, 2025, charges unsealed, foundation halts. This marks the third major financial legal issue for the Sussexes in 18 months, a recurring theme where personal gain trumps duties and ethics. The timeline shows deliberate escalation, not accidental slips, while they profited off their stated mission. Under California Penal Code 432 Rs, false pretenses fraud up to 3 years per count. To 5 aggravated charity fraud up to 5 years per count. Revenue and Tax Code 997 false tax docs up to 4 years. To 186 money laundering up to 4 years. Multiple counts, consecutive sentencing possible. Each faces over 15 years max in state prison theoretically. Max terms rare but highlight gravity. Civil fallout inevitable. 2 AG seeks restitution, 6.3 million ex-interest penalties. IRS may revoke retroactive tax-exempt status, reclassifying donations as personal taxable income. Potential 15 million to liability. 10-year ban from charity leadership. Donor lawsuits for refunds, damages likely succeed. Reputation ruin ends future charity corporate ties. Likely paths ahead. Scenario 1 Tang. Full plea cooperation. Admit fault, pay restitution, probation, community service, no prison. Pragmatic but clashes with their history of denial, blame shifting, victim framing, least probable. Scenario 2 fierce denial defense, top lawyers, blame advisors, staff, claim political bias. Preserves denial but costly 5 monthly fees. Trial exposes evidence, leads to conviction, harsher terms, financial ruin. Scenario 30 flee, leave U.S. Pre-trial to non-extradition spot. Avoids immediate consequences but abandons life here, creates fugitives, bolsters guilt case. Unlikely. UK extradition probable. Scenario 4 partial blame shift, admit issues but claim ignorance, fault staff. Might settle reduced charges, keep some sympathy. Evidence of direct role makes it hard to sell. Given evidence strength, charge seriousness, no accountability pattern. Scenario 2 most likely fight hard, spend big, blame others, lose at trial, face longer sentences, total asset drain, no redemption path. Response deadline February 14, 2025, 28 days, court appearance or default risk. Lawyers signal fight, trial probable late 2025, early 2026. Intervening discovery, evidence sharing, possible leaks, failed motions to suppress, dismiss, jury selection for major white-collar case, then trial, weeks of testimony exposing fraud details publicly.